Hello, this is Graham Bibby here, and it's the 6th of January 2015. I just wanted to get a special report out to you because I noticed over the last year and a half, a lot of people at my seminars ask me a couple of questions, and it usually revolves around gold and silver. I've started off with the chart here of the Australian Ordinaries Index because it's kind of relevant to Australia because Australia is very much a mining and commodity market. So I think it's important that you know what's going on in the commodity sector. But specifically, I want to talk about gold and silver. So, the title of this is, So You Were Told to Be in Gold and Silver as a Hedge and Out of the US Dollar. Where has that gotten you? And I can tell you it's gotten you in a lot of serious deep water if that's the philosophy you followed. Let's first kick off with the Australian stock market. I just want to point out this is where we are, where the arrow is on the right here, as at yesterday's close. And when we look over here, this is where the market was in November 2013 at the same level, which is roughly 13 months ago. What's even more, concerning, let's say, is we're only marginally above where we were in mid-2013. And if you go back even further, we are way below where we were at the end of 2008. In fact, we're at the same level we were in 2006. So 2006 to the beginning of 2015, in my calculation, is 8 years, and the market's roughly at the same level. That's why I don't subscribe to buy and hold. I also look at all analysis and fundamental analysis and views by inverted commas experts as an opinion, a story, and then I want to see if the story is coming true. So a lot of people over the last year or so would have received information to say, hey, they're printing money like crazy. Bernanke's letting money drop out of a helicopter, and you need to have a hedge into gold and possibly silver, roughly 20%. And you definitely don't want to be in the US dollar because that sucker is going to collapse. They're printing money. There's a lot more dollars in circulation. It's going to collapse. Well, what happened? Well, this is gold. This is the gold index, gold mining index. This one here is actual physical gold as through an exchange traded fund, GLD, the Gold Trust. If we go back to January of 2013, this gold trust was about 160. It's 115 now. And since I've been doing my seminars telling people they shouldn't be in gold, which was 2011, where that circle is, this has fallen from just over 185 to 115. That's, a 70-point move, which is somewhere in the region of 35-36%. So to me, when people ask me, what do you think of gold and silver? I just ask a simple question. Is it in an uptrend or is it in a downtrend? If it's in a downtrend, hey presto, we don't want to be in it. Especially if something is happening to make something go in one direction and it's going in the opposite direction. Let's have a quick look at silver. This is what's been happening to silver. The silver index was somewhere around 460. It's 165 now. That's nearly a 65% decline. Oh my God, that is terrible. Here is the Silver Trust. It was 47, it's 15. So if you had a hedge against the worries of the world, that hedge has lost you 2/3 of your money. What is the point, I ask myself. And then you remember, I told you, middle of last year, the US dollar is breaking out of this trading range. See this line here, that circle? And there's another circle here. We were working within that range and we broke out to the upside, roughly where that circle is. So that's that's 81, and the US dollar index is now 91. That is a huge move for a currency. In 6 months, that's 12%. So the currency and gold and silver are doing completely the opposite of what people said. So if you bought gold or silver, you would have lost anywhere between 50% to 65% of your money. And if you'd shorted the US dollar, you'd have lost another whack of money. And it could get worse than that, because this is the ETF Gold Miners Index. Okay, this is leveraged 3 times, but it was 2,100. 2,100. You heard it correct. In 2011. And this is where we are now. Is the price on the right? 13 from 2,100. Some people are holding this because this can be a leverage hedge. Hedge in inverted commas. Hedges for protection. To me, I like the idea of gold and silver, but it hasn't been the place to be. It doesn't mean it won't be the place to be, but I just had to get this out to you because these things are cratering. Just to put you more into the picture, this is the Commodities and Research Bureau Index. It's the basket of commodities, and since June of this year, it was around 310. It's 226. Commodity prices have been falling quite sharply. And then if I put up the Australian ETF, this is what's been happening to it over the same period. It's not quite as bad for the index because this also reflects some currency loss as well. But if you'd bought the Australian exchange traded fund, your money's gone from 28 to 21. Now, in my reckoning, that's 25% in about 5 months. So, if you've got an Australian super or a self-managed super, it's very difficult to make money in this environment because, as we all know, Australia is a commodity-driven market and commodity prices are under pressure everywhere. Gold, silver, other commodities, and I'm just going to tell you here, this is iron and steel, what's been happening to that. And the oil index has been cratering. This is what everyone's concerned about. It was virtually 40 in June. It's 18 now, down 50%. Now, cheaper oil prices you would think would be good because it makes things cheaper, but we don't like things too cheap because the oil companies, the energy companies, which generate profits for the economy, are in a bit of dilemma right now because it's becoming, a lot of things are becoming uneconomical. Now, that's my first message to you in 2015. I got some great news coming up for you towards the end of the week. So if you're not in the Insiders Club, please, ask for details now, and I'll show you how you can avoid being in areas like gold and silver when they're cratering, or commodities, how you can know how to be in the US dollar, and how you can avoid your Australian super scheme or whatever super scheme you got, even if you're not an Australian, how you can avoid those 1 year sideways movements, those 2 year sideways movements, and what it looks like now, an 8 year sideways movement for the Australian stock market index. This is Graham Bibby at 8 minutes and roughly 33 seconds saying welcome to the new year. I know it's going to be a mega year. I'll be back to you soon later this week. Bye-bye.